Hi, welcome. I am so glad you're here. My name is Angel Meeks, and I'm with the Lotus Group at Coldwell Banker Realty. And I've worked with buyers and sellers for over 8 years now. I'm making this webinar because I want to address one of the questions that I get asked the most by buyers, and that is, am I adult enough or am I ready to buy? And usually what buyers mean by that when they ask me that question is, does my credit have to be perfect? Do I have enough money? Do I have to put 20% down? Do I have to be more adult and ready to move forward? Well, we're going to go over all that today and address all of those questions. And hopefully by the end of this webinar, you'll have the information you need to start the process. We are going to walk through all of the upfront costs, not just the mortgage payment, because most people know that they're going to have to pay that part, but a lot of people don't know what the upfront costs are when you go under contract to purchase a home. So we're going to talk about that. We're going to talk about closing costs. We're going to talk about down payment assistance programs. It's going to be a full 20 minutes or so. I'm going to try to keep it short. But if you watch till the end, by the time we're done, you're going to have a clear picture of what it takes to purchase a home. And you're going to have a plan in place, hopefully. And if you don't, then I obviously can help you with that. But hopefully this will help you put together a plan to become a homeowner, because that is ultimately the goal. All righty, let's get to it. I want to start by squashing 3 myths about buying a home that I hear constantly. The first one being that you have to have 20% down to purchase. Obviously, if you have 20%, that's amazing. And you are starting out a lot better than, I would say, 90% of buyers. But you don't have to have 20% down. In fact, there are programs where you can purchase a home with no money down. But we'll get to that in a minute. Number 2, I have to have perfect credit in order to purchase. Again, obviously, if you have great credit, you are further ahead than a lot of people, but there are loan programs designed specifically for buyers who are just building their credit or who've had a few bumps along the way. Number 3, you need to wait until you're ready. Here's the truth. The best time to start is usually earlier than you think. Starting early doesn't lock you into anything. It just gives you information. And that information is what you need to turn those dreams of home ownership into reality. Now, here's the part that no one talks about enough. Even if your down payment is 0, buying a home is not free to start. There are some real upfront costs that you need to know about before you start looking at houses so that you're not blindsided by them once we get under contract. Everyone knows about the mortgage that comes after you closes, but not everyone knows about the upfront costs like EMD and inspections that can derail a transaction right off the bat. So we're going to discuss those so that you're prepared. Once we talk about those upfront costs, we're going to talk about the different types of loans, and then we're going to talk about the process from start to finish. So class is in session. Let's get to it. The first term I want you to understand is earnest money deposit. We will call it EMD. EMD is a good faith deposit. It's also called that sometimes. And basically what it is skin in the game. It tells the seller, hey, I want to buy this house and I'm serious about it. In our Northwest Florida market, EMD is typically 1% of the purchase price. The money is usually due within a few days of going under contract. But the good news about EMD is that it gets taken off of your closing costs or your down payment when you close. If the deal falls through for a contingency that's covered in your contract, like inspections or appraisal or financing, you will typically get that money back. Before you write that offer, we will talk about the specific protections in your contract. The important thing to know right now is that money needs to be liquid, meaning you need to have access to it right now, because it will need to be posted with the title company within 3 to 5 days of going under contract. All right, let's talk about home inspections. They are not required by your lender, but you definitely need one, even on a new construction home. A home inspector is going to go through the house with a fine-tooth comb. They're going to look at the HVAC, the electrical, the plumbing, whatever you can think of, they're going to do. And then they're going to provide you with a written report that usually has videos and pictures and explanations of things that might be concerning. A typical home inspection is anywhere from $300 to $500, and it's usually based off the square footage of the home. So the bigger the home, the more expensive that home inspection will be. Home inspections are valuable for two reasons. First, it tells you what you're buying. You get to see in the attic, under the crawl spaces if they have it, and you get to know what works inside the home and what does not. Second, it gives you the ability to go back to the seller and negotiate repairs on some of the items that might be concerning to you on the report. It's important for you to know that a home inspection is not a deep dive on everything. They will focus primarily on the structure, the home, the HVAC, the electrical, things like that. If there is a septic tank, if there is a pool, they won't necessarily check those out thoroughly. So you may need additional inspections. And if you are doing a VA loan and the property has a well, that's actually a requirement of a VA loan. Insurance will require sometimes a wind mitigation report, which deals with the roof, and a 4-point inspection, which again looks at the major components, the water heater, the HVAC, the electrical, and the plumbing. Your lender may also require a WDO, which is a wood destroying organisms inspection. Looks for wood rot around the doors and things like that. It looks for termites. Obviously, I haven't discussed every inspection that's available. Not all properties will need all of these inspections, but we'll discuss that when you find the property that you love, and we'll figure out what inspections are needed, what are required by the lender, what are required by the insurance, and what are just nice to have, what you absolutely need to have. We'll figure all of that out once you find that perfect property. After your offer is accepted and your loan is moving forward, the lender will order an appraisal. The appraisal is an independent assessment of what the home is worth. The lender will require it and they will order it. They want to ensure that they are not lending $250,000 on a $200,000 home. The cost of an appraisal varies. They're generally anywhere from $500 to $800, and it is an upfront cost that you will pay. The next thing I want to talk about is the survey. A survey is typically a buyer expense. While it's not necessarily an upfront cost, I want to talk about it because if it's ordered by you, the buyer, you are responsible for paying for it. It shows you the boundaries of the property. It marks off where the corners of the property are. It tells you how much land you have. And it's one of those things like a home inspection that even if you're paying cash for a property, you need to have a survey. The survey cost will vary depending on how much property. They can start at $400 and go up to $4,000 or more. This is one of the things that can be negotiated into the contract. And if the seller has one that's usable and accepted by your lender, then we can use that one and it saves everyone money. So now you have a clear picture of those upfront costs: the EMD, the appraisal, the inspections, the survey. Now, instead of being surprises, they'll just be part of the process. Now let's talk about closing costs. Closing costs are fees associated with finalizing the sale of the home. Think of it as the cost of the transaction itself, the cost of transferring it from the seller to you. Closing costs include things like title insurance, lender fees, recording fees, and a few other items. A general rule of thumb is they will probably be anywhere from 3 to 5% of the purchase price of the home. I know those sound like big numbers, but here's the thing though, don't panic, because we can ask the seller to pay some of those things for you. It's not uncommon for sellers in this area to give concessions to buyers so that they can put that money towards their closing costs. It's all going to depend on market conditions, seller motivation, and how we structure the deal, but it's absolutely doable if you let me know ahead of time how much we need to ask for. I want to talk about one of the line items in closing costs because it's one of the ones that people don't think about. It's what's called prepaids. Prepaids are prepaid taxes and insurance that they gather at closing so they can set up an escrow account for you as the buyer. An escrow account is an account set up by the lender, and they take money each month put into that account so that at the end of the year, they can pay your taxes and your insurance. They will collect a few months, usually 3.5 months worth of prepaids, so that they can set up that escrow account for you at closing. Just be aware that that will be part of the process and part of your closing costs. If you're interested and don't already have it, I have a buyer guide that goes into more detail about all of the things that we've discussed so far and more. And I'll put a QR code somewhere on the screen so that you have access to it if you need it and want it. Okay, let's talk about how you're actually going to pay for this thing. While there are a lot of loan options, there are 4 major ones that we're going to talk about today. If you're an active duty service member, a veteran, or a surviving spouse, chances are you will qualify for a VA loan. VA loans are backed by the Department of Veteran Affairs, and they are hands down one of the best mortgage products out there. I'm talking 0 down payment, no private mortgage insurance, and competitive mortgage rates. You can't go wrong with a VA loan. And if you're eligible for one, you earn this benefit, and we're going to use it. As a military relocation professional, I've received specialized training in working with military buyers and sellers. The Northwest Florida market has a significant military presence, and we understand the PCS timeline, and we are here to make it as smooth of a transition as possible. Okay, so let's talk about another 0% down loan called USDA loans. You don't have to be military to qualify for this loan, but there are maximum income requirements. And not only are there requirements for the buyer, but there are requirements for the property as well. USDA eligible properties are usually in rural areas, but there's quite a few in our area that you wouldn't think would qualify for a USDA loan. So if you're interested in that type of loan and want to know more, you can always reach out to me. Or you can download my buyer's guide. Up next are FHA loans. They are backed by the Federal Housing Administration. They are pretty popular with first-time buyers because the eligibility requirements are a little more flexible than some of the other loan products. You can get in an FHA loan for as little as 3.5% down payment, and the credit requirements are lower than a conventional loan. The trade-off for that is that FHA loans do require mortgage insurance, but for most buyers, it's still the better option. Last but not least are conventional loans. Conventional loans are not government-backed loans, and they usually require anywhere from 3 to 20% down. They do have stricter credit requirements, though. So if you have good credit and you have money to put down towards your down payment, this might be the better path for you. Before we wrap up this section about loans, I do want to mention that there are a lot of down payment assistance programs available in the area, throughout Florida and in this area. We have Hometown Heroes, we have the Florida Bond Program, we have SHIP funds. There are so many programs available. I am one of the resources that you can reach out to in order to find out about those programs. Just give me a text, an email, a call, and we can discuss what you may or may not qualify for, and I can point you in the right direction to get access to those funds. Okay, let's talk about lenders. And I have to tell you something that some agents may not tell you, but not all lenders are the same. They all have different fees. And when you're shopping for a lender, you want to make sure that you are comparing apples to apples. That is very important. Now that I've said that, I want to talk about the very first thing that you should do before you get on Zillow and start looking at a house. You need to get a pre-approval. There is a difference between a pre-qualification and a pre-approval. A pre-qualification is a piece of paper that says, based on what you, the buyer, have told me, the lender, I'm no lender, but you get it, based on what you have said, this is what I feel you would qualify for. But they haven't checked anything. They haven't checked credit. They haven't checked your pay stubs, anything like that. Then there's a pre-approval. Before they give you that piece of paper and before they tell you that you can purchase a house for this amount, they're going to check your credit. They're going to check your pay stubs. They're going to pretty much dig in to everything that they would dig into after you got under contract. The pre-approval is what you want. It's so easy to get a pre-qual letter And it's a little bit harder and a little more time consuming to get a pre-approval. But the reason that you want a pre-approval is that they're actually checking. What if you only got a pre-qual and you told your lender, this is the debt that I have, because that's all that you knew, and maybe someone stole your identity and added something to your credit, and you lose out on the house you want because you didn't do the work ahead of time. It's really important to get a pre-approval. That's the first thing you should do as a buyer. Now that you know how much it costs to get started and how financing works, let's walk through the process all the way from the pre-approval till the time that you get your keys. I know you know this, but step number 1 is your pre-approval. Don't skip this part, trust me. You'll thank me later. It would be terrible for you to fall in love with a home only to find that you weren't qualified or can't get approved for the loan. Number 2 is finding an agent. You can find your agent first if you want to, and then they can recommend lenders for you, but definitely work with an agent. I know that AI is powerful, and a lot of people tell me these days that they're going to use AI to purchase the home. But here's the thing. AI is only as good as the prompt that you give it, and you don't know what you don't know. So if you don't know the questions that you need to ask, AI can't give you the answers that you need. If you choose to work with an agent, and I hope you do, you're going to find out that that requires a buyer agreement. I have more detail about that inside of my buyer guide, and I recommend that you read it. A buyer agreement says, I am your agent and you are my buyer, and we agree to work together to get you closed on a home, because I do not get paid unless we close. The buyer agreement does talk about compensation, and it does say that you will pay me for my services. But in most cases, I'm able to get that from the seller. So if you want to have a conversation about what a buyer agreement is and what it entails, let me know. My buyer guide does have a copy of an older one that Coldwell Banker has, but it will give you a general idea of what is inside of a buyer agreement. Step number 3 is the fun part. This is the one that everybody likes, and it's the actual process of finding the home. We're going to be going to showings and looking at homes. And while we're walking through all these homes, you're going to be making sure that your couch will fit here and this bed will go there. But I'm going to be looking at the ceilings and the electrical panel and things like that. Because of the experience that I've had as an agent over the last 8 years or so, I am able to call out some of the things that I know from experience will give us problems during the loan process. So it is quite all right for you to think about where you're going to hang this picture and where you're going to put your forks and spoons, but I'm going to try to mitigate your risk by pointing out things that may or may not keep the house from qualifying for financing. So don't hate me if it seems like I'm a negative Nelly. It's for your benefit, I promise. Once you find the one you love, it's time to make an offer. There's 2 different kinds of contracts that we can use to make that offer. I encourage you to read them if you want them ahead of time. I will absolutely send them to you, but I will explain the differences in the types of offers, and we'll go from there. Once you find the perfect home and you write the perfect offer and all parties have come to a mutual agreement on what is acceptable to them, the seller's satisfied with the price that's offered and the buyers are satisfied with all the terms and the price that they've offered, then we're under contract. That is when all parties have signed and have been notified. We are going to the closing table. After you get under contract, there's going to be inspections, appraisals, we're going to order surveys. There's going to be a lot of things that we talk about during that time. I won't go into detail about them today, but again, I have a buyer guide, goes into detail if you want it. I'll throw the QR up here somewhere. It's going to be a little bit stressful during that time for the first couple of weeks, and then after that, it's mostly hurry up and wait. Then you have your final walkthrough. That will either be the day before closing or the day of closing. We'll walk through the house and we'll make sure that it's in the same condition that it was on the day that we wrote the offer. And then comes the day where most everyone is happy. In most cases, everyone is happy on closing day. The title company's happy, I'm happy, you're happy, the seller's happy. That is the day that you get your keys. You will not get the keys before closing day. So here's where we are. You know what it costs to actually get started. You know the process from beginning to end. The next step is to reach out to either myself or a lender that you trust and get the process started. Just ask questions. There's no obligation, and you don't have to be 3 months out. You can be 3 years out. The important part is to get the information that you need to make the plan, because the plan is what makes the dream a reality. Obviously, if you're ready now, call me. Let's go. Let's do it. I'll get you where you need to be, and we will get you started on looking at homes ASAP. I truly believe that everyone deserves to have the opportunity to own a home and to know what that feels like. So I meet buyers where they are. I don't care if you are 2 years out or 2 months. Give me a call and let's make a plan for you. Thanks so much for spending time with me today. If you have questions, I am here to help in any way that I can. I'm going to throw up some ways to contact me on the screen, and call me if you need me.